Welcome to Explain the Charts. Today we're breaking down XAUUSD, gold against the US dollar, and we're going to cover the latest news and chart data to help you make informed trading decisions. As of right now, September 30th, 2024, gold is experiencing a bit of a decline, trading near the $2,630 level. This slide is a continuation of a downward correction that began earlier in the week, and it's been attributed to a couple of factors. Firstly, month-end flows are favoring the US dollar, which is putting pressure on gold prices. The US dollar's strength is a common theme throughout this week, as traders seem to be taking profits ahead of Jerome Powell's speech, the Fed chair, which is later today. Secondly, gold is in overbought territory, with the Relative Strength Index, RSI, sitting at around 71, which is a sign that the recent rally could be running out of steam. A deeper correction is likely, although strong support exists at the $2,600 level. The recent Middle East escalation and Chinese stimulus measures haven't had a significant impact on gold prices, which is surprising given the usual safe haven demand during geopolitical tensions. However, it's important to remember that markets are always evolving, and it's difficult to predict how these events will ultimately affect gold. This week, the focus will shift from stocks to U.S. employment data, with the JOLTS job opening report, ADP national employment report, and the non-farm payrolls (NFP) release on Friday being key indicators. The labor market situation in the U.S. may become less of a concern after the Federal Reserve, Fed, delivered a 50 basis points (BPS) rate cut in September, which could boost gold demand. China celebrates the Golden Week starting on Tuesday, October 1st, which means local markets will remain closed for the rest of the week, limiting price action after Wall Street closes. From a technical perspective, the daily chart for the XAUUSD pair shows the recent decline could be corrective, but with the potential to continue in the next few days. Technical indicators are firmly south, although well into positive territory, while moving averages maintain their bullish slopes, limiting the midterm bearish potential of gold. The 20 Simple Moving Average, SMA, currently stands at around $2,575, and an approach to it should attract buyers. In the near term, and according to the 4-hour chart, the risk also skews to the downside. XAUUSD has broken below a now mildly bearish 20 SMA while holding above bullish 100 and 200 SMAs. Technical indicators, meanwhile, have fallen well into negative territory, maintaining uneven bearish strength. The daily low at $2,628.66 offers immediate support. If the correction accelerates, the price could test the September 24th low of $2,623 and potentially reach the $2,600 threshold. The Aussie dollar ended September higher against the greenback, despite Powell's slightly hawkish speech, which suggests that markets may not react as negatively to Powell's speech as anticipated. Euro to US dollar surrendered initial gains after a strong bounce in the US dollar, which reinforces the US dollar strength trend we've seen this week. Ethereum is down 2%, struggling around the $2,595 support level, but the overall market sentiment seems to be leaning towards bullishness. The Reserve Bank of Australia is likely to maintain its current policy for the 7th consecutive meeting, which shouldn't have any major impact on gold prices. Let's take a look at the one-day chart and zoom in on the last few weeks of price action. We can see that gold has been on an upward trend for the past month, breaking through resistance levels and hitting new all-time highs. However, the recent decline suggests that the bullish momentum may be slowing down. Looking at the 1-hour chart, we can see that gold has been trading within a tight range over the past few days, consolidating around the $2,650 level. The current decline is breaking below this range, indicating that the bearish pressure may be stronger than previously thought. Traders should be cautious and watch for signs of a potential reversal before entering any new positions. This decline could be a corrective move, but it also could be the start of a longer-term downtrend, so it's crucial to pay attention to the price action and news. The 15-minute chart shows a bit more volatility, with gold breaking below support levels and dropping to a new low for the day. This chart paints a bearish picture for the short term, suggesting that the price could continue to decline in the next few hours. However, it's important to remember that the 15-minute chart is more reactive to short-term fluctuations, so it's crucial to consider the bigger picture when making trading decisions. In conclusion, XAUUSD is currently experiencing a downward correction, but it's unclear whether this is a short-term pullback or the beginning of a longer-term downtrend. Key price levels to watch are the $2,628.66 support level, the September 24th low of $2,623, and the potential $2,600 threshold. Traders should be cautious and watch for signs of a potential reversal before entering any new positions. If the correction accelerates, it could test the September 24th low of $2,623 and potentially reach the $2,600 threshold. The U.S. employment data on Friday is a key event to watch as it could significantly impact gold prices. If the data is strong, it could reinforce the U.S. dollar strength and further pressure gold prices. If the data is weak, it could weaken the U.S. dollar and boost gold demand.